Is it better to buy an apartment or is it better to buy a house? Would you recommend somebody on visa who doesn't have a PR to buy a property in Australia? What is a housing loan and if there are different types of housing loans? What are some of the things that they should keep in mind in order to prepare themselves to be ready to buy a house? Thank you so much, Smita ji, for taking the time out and agreeing to do this podcast. I personally have known you for a while now, and I know the amazing work that you do. But your knowledge, especially about housing and loan and when can somebody buy a house, first house, investment property, everything around this is what we want to cover in this podcast. But thank you for being here.
My pleasure. And I'm really excited to come for this podcast and working with you.
Brilliant. I want to start with your story. So, when did you come to Australia? And if you had to compare Australia when you came here and now, what are some of the differences?
So, we migrated here in Australia in 2008 and came on a state-sponsored visa. And after 2 years where we could get a permanent residency, the comparison, if I have to think specific, I feel the community is much, much more accepting to NRIs and our Indian migrants and all. Wherein in the start, it was not that much acceptance.
Yeah.
Wherein I still remember, number of places, because we were not permanent residents, our resumes wouldn't even be looked at.
Yeah.
Wherein now, being an entrepreneur myself and I have a couple of NRIs and students working for me.
Yeah.
And things have become much more easier, I feel.
I love that. Yeah. I came here in 2017. So you almost came like 10 years before me.
Yes.
And like, if I think about it right now, I think it's just the world would be so different in 2008 because after that, 2009-10 happened when Indians, those incidents happened with Indians in I think in Sydney or something.
Sydney, yeah.
And then bunch of things like Australia wasn't the most favorable country. But then right now, for example, in 2023, maximum number of Indian students ever has come to Australia.
Yeah.
So even the Indian diaspora in Australia is increasing drastically.
100%. And I think the migration is a big key thing for Australia. I think, and especially South Australia, is migration and the wineries. These are the two things. Yeah. We bring a lot of money to this country as well.
So, आप 2008 में Australia आए. Then what was your life like? आपको तुरंत job मिल गई. That is what you were doing.
So we were very fortunate, I would say, wherein me and my husband, we both got our first job in within first 2 months.
Oh, nice.
But only thing when we come from whatever your background is, whatever your caliber is, you have to forget everything and you have to start from the base. So I still remember my first job was in a fashion store as a sales representative.
Right.
Then moved into jewelers at Graham Jewelers, and wherein started learning diamond assortment, looking at the diamonds, and selling jewelry.
Yeah.
And then we got a permanent residency, and much after that, applied in Commonwealth Bank.
Okay.
And from 2012, started my career with Commonwealth Bank.
Oh, nice. Yeah. Okay. And how was working? Because Commonwealth Bank is one of the major 4 banks in Australia.
Yes.
So what was your experience working in those big companies?
So I always look for learning new stuff. When I started with Commonwealth Bank, I started as a teller.
Okay.
So counting cash, looking into people's saving patterns and stuff like that. From there, moved into customer service side where I was helping into personal loans, credit cards, opening up different accounts. Then became business specialist where looked into different complex structures of a businesses, like whether it's a trust or self-managed super fund or it's a company structure or a sole trader. So looked into those side of it. Then moved into more exposure into ComSec and investment through ComSec and shares and stuff like that.
Oh, wow. Okay. That's very diverse.
So very much. And that's where I think the knowledge base went from A to B in that couple of years.
Okay.
But the best one was for all these years, having kids around and looking after that, I never committed myself into full-time employment. And where in 2017, that's where I decided that no, I need to go as a full-time, and started into the lending role with Commonwealth Bank. And that's
Wow.
where I started putting people into their biggest debts of their life. That's how I say it. But
And
yes,
help them achieve their
and
biggest dreams.
biggest dream. And for buying a house is like
Yeah.
everyone's biggest dream. And
Yeah.
to make that happen, and it's a very much contentment, and the success is that, like, giving that kind of exposure to my clients and walking the way with them.
Yeah.
It's amazing.
I think it is a lot of times I feel that buying a house, especially as a migrant, is even more important. So for example, an Indian person in India buying a house is important, but an Indian person abroad buying house is even more important, because that is where we feel that we belong to the country as well, and that we have something of our own here in the new country of residence, right? And a lot of people feel that when they buy their first house. Have you felt that or noticed that?
Now, when you go as a human psychology, when you are leaving your country and when you are coming, you are actually uprooting yourself, and you are moving into a different country and trying to root yourself. Now, when you look into those aspects, number one, a lot of people, they must be taking student loans and coming, fighting with their families that they want to, like, achieve their dream and coming. A lot of time you want to prove yourself as well, that you belong here, and what you are doing is very, very important, and which is where it becomes all the more reason to prove yourself that yes, you are doing well here. And by getting your family settled and making them happy, that's kind of the things you want to do as to help your family.
I agree.
And
Yeah.
which I think in turn comes down to, like, your home buying journey, or having your career opportunities,
Yeah.
and getting your kids into the specific schools where you are looking, like, whether it's a public school or a private school, what best education you can provide.
Yeah.
I used to compare the Indian education to education here for so many years in the start,
Right.
wherein it's very hard for, after certain age, to undo yourself and learn completely new things. Yeah.
Okay. So you started in 2017, 2018, working full time in Combank. How did you make the jump to be an entrepreneur?
Now, that is, again, I know I would be diversing a little bit away from the journey.
Yeah.
But from Commonwealth Bank, I was always have been, like, very passionate about giving best services to my clients. And I'd won my award to go to Fiji in the first year itself.
Oh, wow.
And wherein in Fiji, we were building a school in one of the village. And that's where I decided that if I want to do this kind of work along with my actual job, I need to do something different.
Okay.
And this was in 2019. I decided that I need to start my own business, so that I have more time to do different stuff, what I want to do. And which is where the journey started, as, like, in 2020, 2nd of Jan,
Yeah.
I gave my resignation and started my business as a mortgage broker.
Okay. For the people who don't know, what exactly do mortgage brokers do?
So as a mortgage broker, if you are looking at buying your first house, or if you are looking at refinancing, or if you are walking towards your retirement journey, and how to do the investment through to purchasing a house, or via self-managed super fund, or building your investment portfolio. So all these things is the mortgage broker would look into it.
Okay. Okay, so you started your journey into bank, learned about different things, learned about lending, and then stayed in the same field because that is somewhere you found joy.
And
Right.
it's a big contentment, especially when you're helping people and migrants to buy their first house, and guiding them in a way where that journey becomes so simple,
Yeah.
wherein you are there at every step of the way.
Perfect. And I want to specifically talk about that journey. A couple of things that I want to discuss with you is we want to talk about if somebody's looking to buy their first house, what are the things that they should keep in mind? And also I want to learn more about lending and loans because these are the things that migrants think of, and they sometimes don't have the right guidance or just the knowledge, the basic knowledge. So let's talk about it. There is someone who wants to buy a house. What are some of the things that they should keep in mind in order to prepare themselves to be ready to buy a house?
So a couple of things are most important to keep it in mind as purchasing a property. The big one I would put is your credit score.
Okay.
So without your good credit file, there is you'll have a lot of hiccups in purchasing a property.
Okay.
Second one is, of course, how much deposit you are having and how is your saving pattern is looking like. If you are going to get a loan of 500,000, for example, and if your repayment is say 2,600, but if you are not saving that amount every month, how are you going to cope with those kind of repayments?
Right.
So which is where, as a part of responsible lending, it's our duty to make sure that we are putting you into the debt which you can afford.
Okay.
The third one is what deposit you have,
Yeah.
where you are working, what your income source is. And based on your income source, we decide how much your borrowing capacity would be there as per different banks.
Okay.
And then we go as a pre-approval. If
Okay.
all those first boxes are ticked,
Yeah.
that's where we submit the application for pre-approval.
Okay.
And once you have pre-approval, you are good to go into the market to purchase the property.
Got it.
And then we get the file from that pre-approval to the formal approval to settlement.
Got it. Okay. So just to summarize that, first thing is we need to have a good credit score. Second is we need to figure out how much deposit we would need. Third is we need to figure out how much can we afford. If somebody is making $6,000 a month, but their expense is, let's say, $5,500, then the only spare money they have is $500. So that might not be enough. So they need to figure out how much loan they're going to take and what are the repayments going to be.
But in this scenario, what we do is we go through that. I'll sit with my clients and tell them that this is what they are getting into. Go for 3 months and show that saving pattern.
Right.
Do your changes in your regular lifestyle so that you can achieve your goal in next 3 months or 6 months.
Got it. And once they know that they have the pattern of saving what is needed, then we get the pre-approval. Once we get the pre-approval, then we can go and buy the property.
Correct. Many times people without pre-approval also purchase the property.
Okay.
But then in that scenario, yes, you can do that. But if anything hiccups comes in, which is where there is a risk involved, wherein if you have a pre-approval, you are kind of removing all those risks which are going to come.
Yeah. No, I love that. And one of the things that we mentioned was the deposit.
Yes.
Right? I have heard this. Now, all these things, when it comes to buying a house, I think everybody who has even little bit of knowledge thinks that they're expert and they give their expert opinion. But I want to hear from you. What I've heard is that some people only need 5% deposit. Some people need 10% deposit. Some people need even 15% deposit. So what does it depend on?
So currently, with the government having a lot of promotions are going on here. So if you are a first home buyers and if you are permanent resident and citizen and purchasing a brand new house or buying a land, there is no stamp duty.
Okay.
Secondly, the first home owner grant, $15,000, you can apply for it and get it approved prior to the settlement, and you can use that towards your deposit as well. So a lot of things, there is no right and wrong answer to your question. But with most of the banks, if you have 20% deposit and stamp duty registration cost, so that altogether 25% deposit, then you are not paying any lender mortgage insurance.
Okay.
Now, what this insurance is, so banks can give you 80% loan, but without that insurance, they can't give you anything above 80%.
Okay.
So this insurance does not cover you, but it covers the bank.
Got it.
So in case if the economic crisis happen, or say if somebody is not able to do their repayment and bank have to sell their property at a lower price or something, so banks are covered for that fall.
Got it.
And this is where without this lender mortgage insurance, the banks won't be able to lend.
Okay. So अगर हम सिंपली बात करें, सो हमें डिपॉजिट चाहिए 20%, तो हमें लेंडर्स मॉर्गेज इंश्योरेंस नहीं चाहिए.
Correct.
अगर हमें 5% या 10% डिपॉजिट ही है, तो उसके ऊपर स्टैम्प ड्यूटी होगी और उसके ऊपर mortgage lenders mortgage insurance hoga, and that will be our monthly payment.
That's correct.
Okay.
So you have 91 to 92% loan what bank gives, and your
Okay.
lender mortgage insurance gets added on top of that. So maximum bank will give you is 95% loan.
Got it.
So which means you need that 7 to 8% deposit plus your
Right.
stamp duty, registration and other cost. So if
Okay.
I have to say minimum deposit requirement, I would put it as 14%.
Oh, interesting.
So which covers everything if you are not going for stamp duty waiver, or if you are not qualified for the first homeowner grant.
Yeah.
So there's a lot of criterias. But then again, each scenario is different. And
Okay.
which is where we strongly recommend to have your first appointment at Mortgage Choice St. Peter's. We provide that free appointment so that we kind of find that eligibility
Yeah.
and to check where you stand, and
Yeah.
then we work with your scenario and do the follow-ups accordingly.
I love that. So we talked about stamp duty. Now I have heard that stamp duty is different for people on visa and different for permanent residents.
Yes.
So what is this stamp duty? Who does it go to? And how much percentage is a stamp duty?
So whenever you are purchasing a property, that exchange happens through to revenue SA,
Okay.
and which is where the stamp duty is charged by the government.
Got it.
So the stamp duty, the registration of title, discharge of title, so these are the government charges.
Okay.
So if you are permanent resident, so these are the charges everyone, whether you are permanent resident or citizen, everyone pays that. And that is, there is no different rules for them.
Okay.
But if you are not permanent resident, and if you are on 491 visa or 485 visa or student visa, so then not all the banks would accept these visas, but there are few limited banks who would accept all these visas.
Okay.
Now with this, the non-PR, what they pay is called foreign surcharge, which is approximately 7.5% on top of your stamp duty.
How much is a stamp duty?
Stamp duty is around between 5 to 6%, depending
Okay.
on the value of the property.
Okay.
So there are upfront cost calculators available. If you go on to Revenue SA website
Okay.
and just check what is the stamp duty,
Yeah.
put that as you are a non-PR, and it would give you the exact amount what foreign surcharge you would be paying and your the stamp duty
Interesting.
you would be paying.
Okay. So people on PR and people not on PR. So PR citizens one side and people not on PR on the other side. So people on visas and stuff. They are paying higher stamp duty.
Yes.
And they are paying foreign surcharge. So if somebody
So
on visa.
stamp duty is same for all of them.
Okay.
But people not on PR, they pay two different fees on top.
Okay.
One is the foreign surcharge, and second one is FIRB.
Okay.
And FIRB fee is different if you're buying land and different if you're buying established house.
Okay.
So this changes every now and then. So this rule changed just recently, few months back. So which is where every time have to look into the Revenue SA site and check what are the FIRB guideline at the moment.
You mentioned that people on visa, they need to pay stamp duty, they need to pay FIRB, and they need to pay foreign surcharge. So when they are paying that, it comes out to be around 12%. Is that right?
So 6% is generally a stamp duty, and
Yeah.
7.5% is your foreign surcharge.
Right.
So that itself is the deposit requirement for non-PR becomes roughly around 13.5%.
And that goes to the government.
That-
It's not your deposit that goes to bank or the property.
No.
So
no.
you need that 13.5% if you're on visa.
Correct.
And then because somebody's on visa, they preferably should have between 10 to 20% deposit? Is that for the house?
So they can have 5 to 7%
Okay.
deposit. They can get 95% loan. There are a number of
Right.
lenders do provide 95% loan.
Oh, wow. So if we talk about it, if 18.5% is the least amount of deposit that we need, but would that make the interest rate higher compared to other?
So depending on the bank again, when
Okay.
I'm going, so we can look into the pricing, but that would be similar pricing for PR or non-PR. So banks are not distinguishing them,
Okay.
but few banks don't have that appetite to go for 491, 489 or student visa,
Yeah.
etc. Wherein the banks which have that appetite, the interest rate is not different for PR
it.
or non-PR.
Okay.
The only thing is that foreign surcharge and then FIRB, that is what you need to, as a non-PR applicant, need to have that extra amount there.
Would you recommend somebody on visa who doesn't have a PR to buy a property in Australia?
I would strongly recommend, to be very honest, but look into the way out, because sometimes FIRB is lower on buying a land. So it's always good option to go with a land option. A couple of years back, the FIRB was only $7,500 and still people thought that it was too expensive. Wherein now it has gone much more higher than that. So which is where you need to decide whether how many years it's going to take you to get your permanent residency. Because if you are waiting for 4 years after your 491, in that case, the property market, the way it is going up, and after 4 years, what amount you would be purchasing that property versus what you are getting it right now. Plus, those 4 years you're paying rent as well, which is a donation, and you're paying someone else's mortgage.
Right.
So might as well get something. Maybe it's a land, maybe it is a smaller one, maybe it's a unit or something, but have something of your own. At least you are putting that into your own asset.
I love that. And I actually have thought about it quite a bit. Same thing. I don't want to pay somebody else's mortgage just by paying rent. But also deposit becomes the biggest
Correct.
problem for majority of people on visa. Whether I talk about myself or majority of my friends, it's that 18% to 20% that we just have to spare. And at least a lot of properties, even on average, it will be at least 500,000, 600,000 dollar properties. So which means we just need to save around $100,000.
So again, when I'm saying when you're buying a land, so say for example, you are buying a land for 300,000 and then you're building it around 300,000.
Okay.
So your foreign surcharge, your FIRB, you are only paying on the land, not on to the construction part of it.
Okay.
So that becomes nearly halfway down versus when you're buying an established property.
That's interesting.
So this is where we sit down and we go through with you where you stand, how you want to do. For some person, it might be, no, I want an established house and I'm happy to pay. Yes, by all means, we go with that because depending on the kind of work they are doing, wherein that having a stability in the family household is very, very important.
Okay.
Wherein sometimes when you are starting your new journey and don't have kids and all, people are happy to put that towards land and construction. So a lot of time it goes scenario by scenario.
Okay.
There is nothing right and wrong.
Yeah.
But in whatever stage you are, look into investing into the property. That's what the advice goes all the time to all my clients.
I love that. आपने क्रेडिट स्कोर की भी बात की दैट जब भी हम लोन के लिए अप्लाई करते हैं क्रेडिट स्कोर मैटर करता है. ये क्रेडिट स्कोर क्या होता है एंड हाउ कैन वी बिल्ड इट?
So when you come newly into the country, your file won't have any credit score.
Okay.
So a lot of time we do encourage to have a small credit card so that your file gets started. When you are paying it on time and all, your credit scores start going up.
Okay.
Now, the negative side of it, if I'm thinking, say if you miss the repayment, if you are not good at managing that account. So in that case, every time when you are missing the repayment, late payment and all, so that would give you the negative scoring and you would get that the score becomes negative.
Okay.
If I'm doing too many applications, I used to get clients when I used to work for Commonwealth Bank, wherein they apply need a personal loan as the car broken down. And they went with one bank. They said, okay, the borrowing is lower. They went with second bank and the third bank and the fourth bank. So in that short span of time, when you're having 4 to 6 applications, which is where the system kind of flags it that there's something wrong here, and the person is too desperate to get the loan, and which kind of
This
starts
application is for loan.
for the loans.
Okay.
But then if you get one decline, pause, check, speak to the expert, what can be done, and then take those steps and then apply later on.
Rather than reapplying
Rather
multiple
than
times.
just but currently how everything is online available. Many times if I am on the bank's profile, you would get a message that, oh, you are eligible
loan,
for XYZ loan amount, and you click and submit, and then you get a decline.
Right.
So wherein rather than going through that application or with different banks or something, maybe visit a branch or visit a broker, mortgage broker or someone who can look into your specific scenario and then guide you accordingly.
Interesting. So just to explain credit score simply, it is a score given to you based on your purchasing power, your spending, and it decides how much lending power you have. Is that right? Okay.
No. So the credit score is just your personal file. So say, for example, if you are getting mobile phone from Optus or something, you would go through, if you're going into that 2 years contract with them, they would do your credit score, credit check would be done.
Okay.
So that comes onto your profile. Then if you are going with a different kind of a plan or something, or if I've gone to a jeweler's and purchased something with the Go MasterCard or Latitude card, there are so many different options, Zip Pay. So for everything, the credit check is happening.
Okay.
So in a year, there is no harm in doing number of checks.
Okay.
But how quickly you are doing those checks, how many declines you are having, how you are managing these liabilities which you are taking. Are you paying them on time? Are you doing the right, remembering to do the repayments, etc. on time? You don't have any dishonors on your file. Because if I have a mobile bill coming out from my account on 10th of January and I have funds, but funds are sitting in my saving account and not in my transaction account, and the dishonor happens. So these all things affects your credit score.
Okay.
And once your credit score goes below 600, there are number of banks will not even touch you.
Okay. What is the highest credit score we can have?
It can go, I think, around 1200 mark.
Oh, wow. Okay.
Yeah.
Okay, cool. So, and if you have to give 3 tips to maintain a high credit score, what would that be?
So pay your debts on time.
Okay.
Do not do number of applications in emergency.
Okay.
And if you are doing any kind of number of inquiries, speak to the right person who can guide you.
So they can go to a bank.
Yes, into the branch, or over the phone there are available customer service specialists are there who can look into what your current scenario is. Are you started a new job? Are you casual? You started a new business recently? Because number of time the bank can't accept all the income. So they would look into your specific scenario and then give you the advice to wait or to do the application.
Okay. Who manages the credit score? Is that the government or is that a company that does it?
No, it's like Equifax or Vira. So that's where your file is created, and all the banks and all, they go to them to fetch the data.
Okay. So there is this organization that has our data and that manages our credit score personal file for everybody who has, let's say, a bank account or who...
As soon as you have a driver's license or any kind of contract you are getting in, whether it's a mobile phone you are buying or whether it's furniture you are buying through with a loan, automatically the file gets open up. And then once you have that file open, every inquiry you do after that, it goes through to the same file.
Got it. Perfect. So if somebody wants to manage their credit score and keep it high, they should do their payments on time. They should make sure that if they're applying for loans or debt, then they are not getting a lot of decline.
Yes.
And what would be a third advice?
third advice is like, speak to the right advisor.
Right. So
Whether-
people who are expert, whether it's if they're planning to buy a house, it would be somebody like
home
you
lending,
who's
home lending
mortgage,
specialist, mortgage broker, like,
or
So,
if they want
yeah.
just a small loan, personal loan from bank, they can go to the bank and talk if they have enough
Correct.
funds or credit score to get that money.
Yes.
I love that. And now I want to talk more about just loans, right? Because I hear this, especially during COVID, we had heard that the housing loan interest was really low, but in COVID it went really high, and a lot of people were selling their properties during COVID, and all these news that we are hearing. But I personally don't know what is true, what is not. Is it easier to buy a house now? And a lot of people are saying that the interest rates are not going to go up. But can you give us a brief of what are these interest rates? Are they like really high right now? Is it good time to buy property or not? Or is it good time to get a loan?
So number one, yes, we are at the peak of the interest rates at the moment, wherein during when the COVID started, the government had a lot of initiatives and the interest rate went really low.
Okay.
But then after when everything started falling in place, the interest rates have gone like, one rise after the other, and we are at the peak. Luckily, last couple of months, we haven't seen a rate rise yet. And they are already talking of like, that interest rate might drop down start of next year.
Okay.
So possibly and hopefully like, that we would see that dip maybe February or March next year. I wish I have a crystal ball where I can look into it and say that yes, interest rate is going to go in upward direction or the downward direction.
Yeah.
But from the data and economists and like, number of predictions what are happening, it looks like that we are like, at the peak at the moment.
Got it.
Your second question, whether to buy a property or no with this, answer to that would be any time. Whenever you are ready, look into purchasing a property.
Okay.
Because when I see, say, for example, if I have like, say $50,000, if I'm investing into my shares or super fund or something, it's the return on investment. If I look into it, it's like, in 15 years, that would become maybe 150,000. But if I have that money and bought a property along with it, and if you are leaving that for like 15 years, that value with the bank's loan and all, your asset value becomes straight from 50,000 to maybe like 300,000.
Right.
And then you are leaving that when after 15 years that property might go up to around like 450 or something.
Yeah.
So which is where when you look into the capital growth and the return on your investment, it's always in the property. It looks like much more higher.
Okay.
The only thing, if I have an emergency, I have to sell that entire asset. If I need like, 50,000 out.
Yeah.
So which is where you have to still, I would talk on diversifying your investment.
Okay.
But at the same time, you should have your long-term goal as to put a goal post that at age of 50, if I want to retire, how I want to go about it.
Got it. So again, sticking to loans, right? So for buying a house, we would get a housing loan. Is that right?
Yes.
Okay. And we hear all different types of things, right? Some of the things that I've heard is that once you get a housing loan, you have to make monthly payments. But there are certain loans where you cannot make a big chunk of payment.
Correct.
And if you miss a loan payment or something, bank can take the whole property. Just the things that we hear, right? And I don't know what is true or what is not. I don't have a housing loan. So can you give a brief of what is a housing loan and if there are different types of housing loans?
So there are different type of housing loans. But to first coming back to like, bank is not going to take your property.
Okay.
Even if you are having some health issues or something drastic happened in your life.
Yeah.
All the banks have financial hardship, the phone numbers.
Okay.
You can give them a call. You can have your repayment holiday in that period.
Okay.
And they would help you and it doesn't even affect your credit score.
Got
so
it.
those provisions are there in the specific scenario when you need.
Okay.
But not that just you don't want to do the repayment. They will take off your repayment. No, that doesn't happen.
Fair enough.
So the banks are not there just to take your property. But yes, if you are not doing number of repayments, they would send you the notice. They send you a couple of reminders. And after that, if that happens, that's where the bank have to take the drastic steps.
Got it.
So you don't have to worry about it that, next month if I don't do, and my property would be gone.
Fair enough.
Coming on to your question, different types of loans.
Yep.
So you are spot on that some of the loans you can't do big chunk payment.
Okay.
So we have fixed rate loan and a variable rate loan.
Okay.
With fixed rate, most of the banks only allows $10,000 per year. You can do additional payment other than your repayment.
Got it.
Wherein on a variable rate loan, you have an open end. If you win a lotto and you want to put 100,000 into your loan, yes, you can do that.
Okay. Fixed rate is if I have a housing loan for 15 years at, let's say, 6%.
No, but the maximum, some of the banks do give you that 10 years fixed rate loan or 5 years fixed rate loan. But the lower interest rate is generally 1 year, 2 year or 3 year fixed rate.
Okay.
So most of the
people... But in India, we have 30-year loans as well,
So
no?
even right now, the loans are 30 years. But out of that 30 years, for that 2 years, you're going with the fixed rate. And after 2 years, your loan would go back to the variable rate.
Right.
And then you have a look at it, what best interest rate is there at that point of time. And you refix it, reassess your situation. And then whatever is the best solution in your specific scenario, that's what I would say, speak to your financial advisor to go through that scenario, which is tailor-made as per your requirement.
Okay. So fixed rate loan and variable rate loan.
Correct.
Fixed rate is for X number of years. Your rate of interest is fixed. So let's say if it's 6% or 5%, then even if the market is at 8%, for that 2 years, you'll stick to 5%. But even if it goes 3%, you'll stick to 5%.
You are still stuck to 5%.
Right. Okay.
Yes.
And variable is you just stick to market rate.
Correct.
And if it goes up, your interest payments would go up.
Correct.
And if it goes down, it will go down. Okay, understood. And which loan is better for somebody who's buying their first house?
So whenever we are giving an advice, I generally look into the client's saving pattern.
Okay.
So say after your rental payment and everything, if you are still able to husband and wife working full time, have no kids, sometimes they still save around 30 to 40,000 on top. So in those scenario, what we generally do is I look into the split loans.
Okay.
So you have the big chunk on a fixed rate and $50,000 maybe on a variable rate.
Right.
So which gives you that flexibility because as a human nature, you want to save. Mm-hmm. You want to pay off your mortgage quicker. And this gives you a motivation to use your variable rate loan as your saving account and try and pay that off in that 2 years time. And you have a fixed rate. So even on top of that, if you want to do extra payment, you have that $10,000 per year. You can put it on fixed rate as well.
Interesting.
So which gives you that ample options to have that flexibility.
Okay, so there isn't that first we should go with fixed rate or we should.
No.
It depends on how much money we're making.
Depends on the current. If we are on a peak right now, I would sometimes put it only for 1 year fixed, not more than that.
Got it.
Because in the start of next year, if the interest rate goes down, I want to wait till February, March and see which direction the market is going.
Okay, that is very interesting. Okay, so a little bit about loans, and I want to ask the age-old question. I have discussed this with almost all my friends. Is it better to buy an apartment or is it better to buy a house?
Buying a property is must. Now, buying an apartment versus a house, it goes a scenario based.
Right.
There is nothing right and wrong in it. But depending on how you want return on your investments.
Okay.
Now, the history, when you look into it, the data in South Australia, for example, the apartment value, if you look into 5 years back versus now, or a unit which was sold 5 years back versus now, what is the growth what you have received?
Yeah.
And the same thing if you look into for the house with a bigger land, so if it is 500 square meter land versus 100 square meter land on the unit, so the growth when you see it's apartments have the lower growth versus the house.
Okay.
Now, again, right and wrong is what you need to choose for yourself. Because say, for example, if I want to live closer to city where I want less commuting time, etc. So in that scenario, I want to be closer to the city. Now, closer to the city, if I'm buying a bigger house, the cost is going to be say
Massive.
600 to 700,000 minimum.
Yeah.
And if you have to wait for 3 to 4 years, so in that case, at least to get yourself into the apartment and start your journey so that you are not paying the rent and it goes towards your own house.
Okay.
And then down the track, when you are ready, you can purchase a bigger property, you can purchase a house. So you can pick and choose your scenarios accordingly.
Got it.
Lot of time in Sydney, Melbourne, I have clients where they are renting into the city because they want to be close to the city.
Yeah.
And then they have the investment property somewhere away.
Okay.
So that is again yes, you are getting a rent and you are paying a rent.
Right.
So that is again not a bad option because it's in the end, it's your investment. In
Okay.
the end, how you look at it, it's it depends on you personally and what is your comfort zone.
Got it.
Now,
Okay.
for example, if I am retiring and I want the good amount on my investment.
Okay.
Now, if I have a $2 million property in a posh suburb,
Right.
and if I want to rent it out, it's not going to give me a huge rent.
Okay.
But instead of that, if I have the small properties, maybe even if it is a little bit further away, my return on investment would be much more higher. Yes, the asset value is bigger here, but here I'll have more small assets, which is generating revenue for me, which I can use it for my retirement.
Right. So the cash flow will be higher.
Higher. And
Okay.
then if I'm retired, in that case, if I say that I need $50,000 as my income a year, so in that case, I need at least 2 to 3 properties, which is freehold, so that I can get that kind of an income.
Okay, so those units or apartments, if you put it on rent, you're going to have the cash flow, regular cash flow, and that is a lot of people do when they retire, so they don't have to worry about.
Again, it's a choice what
Yeah.
people have to make. So
Okay.
depending on what you are looking for it, what is the amount what you are looking for. And then many times it would be maybe $500,000 different houses people invest, or the 6 units in one block, and they would
Okay.
go with 6 units.
Yeah.
So depending on person to person and what
Right.
your aspirations are,
Okay.
it changes that way.
If I can ask you a personal question, what was your first property? Was it an apartment or a land or a house?
It was a house in Mawson Lake.
Oh,
Yeah.
Mawson Lake must have grown. Like I've seen at least in
it's
last, it has grown a
I
lot.
can still go back and feel that I can retire there too.
Yeah,
If
it's
I
just
have to.
beautiful.
Yeah.
Sometimes I come for walks there, and it's just really pretty, and also very well planned.
Yes. They have a lot of lakes. Any street you stand up, it looks picturesque.
Yeah.
All newly built houses there, so it's and a very nice different school and college.
Yeah.
Walking distance to a lot of stuff, so it becomes perfect. Yeah.
What is your favorite suburb in Adelaide?
Oh my God. My favorite suburb. I feel I love my house.
Yeah, Mawson Lakes.
So no, right now we are in Windsor Garden.
Okay.
So it's the nice little pocket where we are on a linear park and
Yeah.
see koala so many times,
Oh, wow.
around. So it's I am still in the city and still out of the city.
I love
It's
that.
as soon as I go.
Would you suggest someone to live in the hills?
Oh, absolutely.
Yeah?
Yeah, it's beautiful because you are close to the nature, and Adelaide is so beautiful. You have the beaches and the mountains and hills, everything is so close by.
Yeah.
So you can pick and choose and still enjoy all of them.
Yeah, I always I've heard so many people say that Adelaide is a hidden gem in the world, where if you want a lifestyle where you have 15 minutes to the beach, 15 minutes to the hills, 15 minutes to the city. All those 3 things are possible.
Correct.
And you don't have to travel either of the things for 1 hour or 2 hours that probably you have to do in Melbourne or
yes.
Sydney, obviously.
More than that. Yeah, at least an hour drive or something what you are looking at.
Yeah. So Mawson Lake, so when did you buy your first house and how much did it cost?
So when we purchased, our first house was in 2011, and we bought it for I think roughly around 380 mark.
Oh, nice.
Now again, when you're purchasing a property, you need to see the supply and demand in that suburb.
Okay.
So when we purchased this house, Mawson Lake was like establishing. There was so much of new lands were coming up, so much of new construction was happening. And at that stage, like, in the first 4 years, if I look at the growth in Mawson Lakes, but was very minimal.
Okay.
But now it's all developed.
Right.
And in last 5 years, the way the growth in the state in Mawson Lakes it's been like,
Tremendous.
straight upward direction.
Yeah.
So the similar house, what we bought for 380, if I have to buy that same house right now, it would be easily around 800 mark.
Oh, wow.
Right now.
That's over 100%
that's
appreciation.
Right. So which is where, like, that your investment into the property, how it plays, and where to buy, why to buy, those things you need to do the research.
Okay.
Now, as a part of, like, mortgage broking, we do provide the property reports to all our clients for free.
Right.
So what it means, it's like, it gives you the data. It gives you the data when this property was last listed or rented, or like, when it was built, what kind of approvals were in place.
Okay.
So a lot of this data is given in that. Plus, it has the properties on market and recent sold properties. So all these things comes into that reporting, because you are not going to buy a $500,000 house every day.
Yeah.
This is a big investment what you are doing. So you want to still make sure that
right
you are doing a right investment. You are investing into the right zoning and the suburb, and looking into, like, whether you are not very close to the main road. Or on the main road, because the noise pollution will reduce your property value.
Okay.
If there is a lot of commercial properties around it, and if it is you're buying a residential house for you to live in, so that would have an impact on it.
Okay.
If it is very close to just opposite to the school or something, so a lot of time the kids nuisance and all that comes across. So that would, like, so when you're buying the property, you need to look into the location. I would advise people to look through Google Map. Mm-hmm. Recently, I had one client wherein the house was there, and just behind there was a cemetery.
Right.
And the property was like, beautiful house, but it was like, much lower price range than the other houses in the area.
Yeah.
And it felt like, there's something, what is it? Like, why it is so cheap?
Yeah.
And it's like just these small things.
Yeah.
There's no harm in buying behind it. But once you know what you are investing in, then go for it. Like,
Okay.
So that's where you need to look at where you are purchasing the property. Is that already developed, or is there, like, a lot of land releases are coming up?
Okay.
Because that would, like, slow down the growth of that suburb, because other lands are available already,
right,
which would sell for a cheaper price. So your property value is not going to jump up that
Supply
much.
is a lot more.
Yes.
Okay. And if we just talk about Adelaide, what are 2 or 3 suburbs that you're banking on that is going to have good growth?
Or anytime the eastern suburbs, because of the good schools around, and people want to be in a school zone, wherein we have Glenanga, Linden Park, like Marriottville. So some of the best schools. And anyone, like, they would want to be into the good schools, and which is where, like, those suburbs are always going to be in limelight. So if the property comes into the market, I will have a very less negotiations on there. I have to go whatever is the market value. Most of the time people are going above that and putting their offers.
Wow. I love that.
So, which is like, again, looking into for your investment, the school zone is also like, very good way to look where you want to put your money.
Okay. Awesome. That was so cool. Okay. We're coming towards the end of the podcast, and I want to ask your advice. So what would your advice be to somebody who doesn't have the deposit right now, but would want to buy a house in next few years? What should they do?
The biggest one is, like, most of the banks, if you go on my website, there is budget calculator. So number one, what I would advise everyone to look at it, even when I'm purchasing the next property, I would look into budget calculator.
Okay.
What are my fixed costs which I cannot avoid? Your food, grocery, mobile bills, your petrol, rego, you cannot avoid it. You have to pay those. After that, so look at your net income, what you receive in the account, your fixed cost, and the difference between them is your extra funds, what you have. And then look into that how much you want to put that extra funds into your luxuries, into your travel, and into your goal towards buying your property.
Okay.
So that is the personal life changes what you have to do. Anyone who wants to achieve your goals, you need to put, if I say that I want to travel the world, I need to put money aside for my travel plan. So then I know that when I'm going, I would have sufficient funds to do that.
Yeah.
So same way, if I'm purchasing a house, in that case, if I can go through in our appointment what deposit you would require, and put a goal for yourself that, okay, in 8 months, I want to achieve that goal. How much I need to save. So if it is $1,000 or $1,500 a month, husband and wife both are working. In that case, you can put that money, start putting that aside so that you are ready in that 6 to 8 months to buy your property. And as much higher deposit you have, you lower your lender mortgage insurance, because that's a donation is going out of your pocket, which you are never going to get it back. So might as well have little bit of a crunch in your pocket right now. Get as much as higher deposit as you have so that you can go on to your goal as fast as possible.
I love that. That was so crystal clear, and also a very actionable advice that you have given. Thank you so much for doing that. And also thank you so much for all these amazing things that you have told us about buying a house, just educating us on whether it's apartments, houses, what are the things that we should take care of, what is the credit score and everything. So thank you for taking the time out, and I'm sure I have gotten a lot of value, and our audience would have received a lot of value as well.
Now, thank you so much for inviting me here and to help a lot of our migrants, because I'm so close with my first home buyers, because when we came to Australia and when I was buying my first house, 1 week prior, I didn't even knew that we need to have a conveyancer.
Oh.
And there was nobody to tell us, and wherein we were we paid almost double the price because we had to get the conveyancer at the last minute, and we had to organize everything and run through that. Wherein when we have these kind of informative sessions for people, it becomes much more easier and becomes a smoother journey for anyone to buy their first house.
Awesome. Thank you.